Hey, what's up, fam? I hope everybody's having a great day, whatever time it is right now for you all. Let's hop right into this weekly options forecast meeting. One moment. So I have a lot to get through quickly. Everyone knows I'm traveling this week. Um, it's a lot going on, but I wanted to do this meeting, get it out for everyone. Let's hop right into things. So disclaimer, by watching or reading this, you're saying you understand the following. I'm not a financial advisor, and this is not trading advice. This session is solely for educational purposes. There are significant financial risks associated with options trading, and I'm not liable for your wins or losses in the market if you decide to act on this information. Okay, so sector performance, we're going to hop right into things. Friday, as you can see, a lot of smart money was rotating out of big tech comms, basic materials, everything, and they was rolling into energy and consumer staples. The consumer staples are the defensive stocks, that people go hide in when there's uncertainty in the market. So that's where everything was going. As you can see for the week, the only green sector we had was energy for the week. And if you remember last week's meeting, one of the stocks or the ETFs I told you guys to watch was XLE, which is an ETF that tracks the energy sector. It's up. Let's just move right along. So I'm making a note of something now. Moving right along. So this is our weekly market overview. You see Microsoft is down 0.31%. Meta's down 1.5759%. We got Google down. See, Google was out of all of the Max 7, you see how Google got hit the hardest, down 5.16%, while Amazon is down 1.67%. So as you can see, we had like the Max 7 was pretty much down, but Apple and Tesla finished the week up. So positive on the week. As you can see here on the heat map, we had a lot of red, but there's some sprinkles in there. Like I said, energy, you got energy in there, you got the consumer staples up in here, and you got some financials in there as well that were up. One of the stocks that I was on my watch list last week was Goldman Sachs, and that one had a pretty nice move this past week. Let's move right along. Okay. All right. So I didn't update this slide this week because, like I said, I wanted to get this meeting done quickly. But as you can see, like excluding last week, you can still see that we are, because I didn't update this slide yet. So this is still from last week. These are yearly totals from week ending June 13th. So I didn't update it this week, but just still something to look at though, because we're going to move right into things. But for those who are just listening and aren't watching, our average weekly profit, $1,600. Average monthly profit, 6,500. Average profit per trade, 198%. These are just totals year to date, just averages from year to date. We generated over $36,000, and these are for members just buying one option per trade alert because risk management is important around here. ROI on the $250 membership, 14,000% ROI on the 175 monthly membership, 20,000% ROI. So we're clearing it. Like I said, totals reflect pure net profits based on purchasing a single contract per trade alert. So net profits means after you subtract the losses from the wins, this is the total. And we're only about halfway through the year. So we have a long way to go. All right. So I'm not going to go through these slides right now. These are the our monthly profits. Because I'm strapped for time. So you guys can just go through that. So let's get to market talk because we got a lot to cover. So look, I want to just cover a few things. Yeah, we're going to talk about Everything that's going on right now. It's a lot. But I want to start with Meta. So we were in a Meta trade last week, and let me just bring this up. Yeah, so we were in a Meta trade. That's gonna be a good segue. We were in a Meta trade last week, a Meta call trade, and for quad witching, because Meta has a track record with quad witching, and we were just in this trade. What I reason I'm bringing this up, the Meta call trade did not work out the way that we anticipated it to work out. The market gapped down, and what that's not actually what happened. The market did not gap down. So Meta did gap up. Meta gapped up $5 the next day, ran another dollar and some change. So from where the market closed that day before, Meta gapped up because we were off for Juneteenth. So the day after market, Meta gapped up $5 and then ran another dollar and some change after the market opened. At that point, I should have had my team to close out those positions. I did not do that. Some members got out of the trade or whatever, but I didn't have them do that. QQQ and SPY were running. There were some selling pressure on Meta early, but I'm like, okay, cool. We're gonna let it ride out a little bit because again, we didn't have any. It wasn't like we were trading zero day to expiry. Our contracts didn't expire until they don't expire until this week. So we had time on our side. So theta, it was a lot of stuff that we had a little protection from going into. So we had some leverage on the trade. So instead of cutting the trade, what we made up some ground on it. When Meta started to drop or whatever, we waited for that confirmation candle on the session hourly, and I put the team in Meta puts to absorb the pace, absorb the blow. Those Meta puts went north of 170%. So all of the money that was pretty much that could have been lost in the Meta trade or whatever on the call trade, we made it up on the put side. But the point was, like I said, the main takeaway, because it's always a takeaway and things that you can do better and everything like that. Now, let's just be clear. There are some chances that I'm just going to take some time. Like I said, I've been trading Meta for years, and I wanted to kind of see what the final stretch was going to be for quad witching, and it did. Oh, it made a big move during that final stretch, but not in the direction that we wanted it to go in, which was fine. It's okay, but there's always something to learn or gain from these situations. Like I like to put them out there on Front Street. Somebody said, "Oh yeah, you talk about your wins all the time. You don't talk about losses." Oh, we talk about losses. We amplify them on these meetings. So lessons learned and stuff like that. And so, yeah, like I said, I should have probably just had the team to cut that trade, that morning when Meta gapped up. So, but yeah, it is what it is. We got inputs and, we made money on the puts and that kind of, absorbed the pace of the situation. So, yeah, so I wanted to cover that. And, while we're on Meta, what I will say is, let me just, yeah, I'm gonna talk about it now because we're on Meta. Why not just talk about it now? Now I gotta hold off with Meta because I feel like we should. I'm gonna wait until we get to the charts and to talk about that. But yeah, so I just Meta finished at key levels. I'll say that it finished at a key level, and I think that I still believe that the market will be. I think the market will be up tomorrow, but we'll talk about that more in a second. Because the next segue, we're gonna segue right into the next topic. We're gonna segue right into that, which is the U.S. Iran Israel tensions. It's a lot of headlines out right now, and for those who've been sleeping under a rock, we know that the U.S. went and bombed the three. Um, we hit these the Iran nuclear sites, all three of them, right? And Trump said our jets are on their way home. They got out of there safely, and and from what I understand from the headlines, there's some things that, but I've seen a lot of headlines. A lot of them say that the U.S. Obliterates Iran's nuclear sites. So yeah, But we got to see exactly what happened. I know that the stock market in Israel is up right now. They opened and they hit all time. They hit new record highs today after the U.S. strikes the nuclear sites in Iran. So I mean, so their stock market is up right now, and then I also see Bitcoin is up right now also. So these are things that are pointing to our market possibly opening up too. Because I mean, we got obviously other scenarios that could play out with regards to this. But what I say is the market doesn't like uncertainty. Now, Trump just basically put Iran down for a while. So I feel like we don't have to worry about Iran for a little while. They're down right now. So the threat, the immediate, the uncertainty is done for right now. So I think we'll see how the Asian futures market responds tonight. But I feel like part of the reason that because remember on Friday afternoon, Trump said that he was going to give Iran about 2 weeks to decide what they were going to do before we took action. And then the next day, last night, this happened. So, yeah, but like I said, the immediate threat. Hold on, sorry guys. Yeah, so the immediate threat right now, yes, it's off the table for right now. And the market doesn't like uncertainty. That kind of gets us out of an uncertain situation for right now. So I think the market takes that as a positive. Now, if the reverse happens, then we got to look at it where oil and energy will continue to run, gold will be up. We'll see where the VIX is tomorrow because we won't see the VIX. We won't see that until tomorrow. So we'll see how that works. I'll see how things work and go from there. But there's a lot going on. We just got to really understand that there's a lot going on. There's a lot going on. There's a lot going on. I was just going through some headlines just now, just looking at what Vice President Vance has to say about it. And Vance, U.S. destroyed Iran nuclear program. Biggest U.S. red line is Iranian nuclear program. The U.S. is not this is a good headline right here from CNBC. The U.S. is not at war with Iran, but at war with its nuclear program. So yeah, U.S. The U.S. have received direct messages, I mean indirect messages from Iran. The U.S. is prepared in case Iran retaliates. Okay, cool. Just wanted to get through those headlines. So it's a lot going on. Like I said, let's just see. So as far as economic data this week, right now we got services PMI Monday, we got manufacturing PMI, existing home sales. Tuesday we got house price index, consumer confidence. Wednesday, we have new home sales. Thursday, GDP, jobless claims, durable goods orders, pending home sales. Friday, we have PCE data and consumer sentiment. So we have a stack. We have a lot of economic data now. You know that Powell is testifying on for the House and Senate this week. So we have that to look forward to. It's a 2-day testimony, and it's going to be very interesting to hear what his comments are towards, because they get a lot of times in those when Powell speaks before the House, they get him riled up. But I feel like it's a lot of tension right now, and there are going to be a lot of things that he won't really. I don't think he'll be able to dance around a lot of things that he's been able to avoid addressing now. So we'll see how that plays out. But I'm looking forward to seeing what type of volatility it induces. So just again, just look out for that. So yeah, but we got a lot of charts to get through. So I'm just trying to move through this. I was just checking to see if there were any additional updates that I needed to cover. Okay, cool. Good. So let's go back here and I'm going to switch over. We're just going to jump right into Meta. Yeah, let's talk about Meta. Meta platforms. Meta platforms. All right, so here we are, Meta platform. So here, let me just enlarge in this a little bit. All right, so you see where Meta finished here. We touched on this a little bit Friday, but I'm just gonna hit it right here, finish right at a key level. So, and it spans all the way here too. So we got this level here, Meta retested it last few times, and still held. Yeah, we lost the 90 in May. But I want y'all to pay attention to some other things. And again, things happen. It's cool. The market gonna do what it wants to do. But look at this too. I just want to point out something because it lost the 90 in May, but it lost it here also. This was a Friday the 13th. It closed under its 90 in May, still holding this key level. And it closed at 682.87. And that Monday, it gapped up to 699.33. So like almost like an $18 move off of this key level. The last time it was here too, it gapped up off of this level. This was on a Thursday and it gapped up the next day, like about $10 on this one. Is that 10 or $12, something like that? Like $12 move. Yeah, so let's just see what Meta does here, see if we get a move up from here. I mean, because it's a few things that can happen, obviously, we're not biased around here. We play whatever the market gives us, right? So that's just how we gotta carry the situation. Like whatever the market gives us is what we will play. But like I know it's a lot of uncertainty because of what's going on and the geopolitical stuff. But all right, let's just talk though. Let's just talk price. So yeah, over Meta over 701.82. I'm looking for a move back up to 708.87, 715, and 720. That's what I'll be looking for Meta from there. And 1 second, go. Now, on the flip, if we were to lose, I don't really want to put any levels on this chart. I got another chart where there will be levels, but I'll just give y'all the prices. But I really don't want to mark this, my clean meta chart. All of my meta charts are marked up. I don't really want to mark this one up. But I'm just gonna put it there. So if we were to lose that 687, sorry, 678, if we lose 678.67, look for a retest of 668. Yeah, 668. That's what I look for. And then a possible move even lower because if we were to break down there, then I think we zoom out, show you out a weekly for a second on Meta. So, this is where we are right now. So we take that level, then we halfway down, we got some ways down we can go. So we watch that. Have to lose that 668. Then 650 is in play, and so just we'll be watching. We'll be watching to see what happens, what move we got. But I like it right here. I think it's a nice place to bounce. So just keep Meta on watch. Lily, Lily. Lily was one of the biggest losers last week. We had it dragging the market down. So, but it finished here. Look where we finished at, just up in here. So, we're gonna watch Lily. We're gonna watch Lily and we're gonna see where Lily goes because there is a possibility for a continuation to the downside. how it went up and rejected the 200 day and came crashing down. And then, lost the 9, lost the 50. It's just the flushing metals right now. So there's some room for some continuation to the downside here on Lilly. So we're gonna watch Lilly and see what we get from this because yeah, it's a big move, but it could continue. We're gonna watch it. If we were to lose that 755.56, look for a retest of 649. From there, we can get back. We can probably drop all the way down to like 730. So just keep it on watch. I mean, and there are possible more levels. If we were to clear that 786, clear the 786 price level, I'm looking for a retest of 801 and then a retest of 823.62. So keep Lilly on watch. Big mover, big mover. Okay, Kroger was one of the biggest gainers last week. It's nearing this all-time high again. So this looks pretty good. Leave over 72.23. We can retest that 73.63 and then 75 would be the next level after that. So we want to keep this one on watch. Now, if we lose 67.50, we lose 67.50, then 67.05, but I think we'll come back down and fill this gap if that happens. If it finds a way back down there, then you have a problem. But I like the fact that it reclaimed its 50 and it's holding up there the way it is. So that looks pretty promising. Looks pretty good. So yeah, we lose that 67.50. Look for a retest of 66. But yeah, we got a green oscillator bar. I love everything about this chart, this breakout. I like a wedge break. Looks good. Keep Kroger on watch. XLP is an ETF that tracks the consumer staples ETF, and with everything that's going on right now, this is something that you could watch. Now, let's just talk about it for a second. I told y'all the consumer staples are the defensive stocks. And when I say defensive stocks, I'm not talking about Lockheed Martin, like defense. I'm saying defensive, like think about it like this. If there's a war or a recession or a pandemic, which stores would you still go to because you have to? Walmart, Costco, people still buying Coca-Cola, people still buying Pepsi, people still, you know, buying Procter and Gamble products, they're still buying Colgate toothpaste or Palm Olive. They're still doing these things. So that's why they're defensive stocks. Jim Cramer always says there's always a bull market somewhere. So while market's selling off, you got other stocks that, they're rotating into those because they're in play now. So just this is the sector, this is the ETF that tracks that sector. Now I'm gonna tell y'all the top holdings in XLP, because some people want to go and trade the individual stocks. You got Costco, Procter and Gamble, Walmart, and Coca-Cola. They are the top four in the ETF, so yeah, they're the biggest holdings in there. So you can trade them or you can just watch the ETF. Now, this is the thing. We got a nice 222 reversal here on the daily after bouncing off of its 200-day EMA. Rejected the 9, but looks pretty good here. Now, I will warn y'all, like the ETF moves slowly. It's a pretty slow moving ETF. So you gotta be careful with it sometimes, and time can help out. But it depends on what's going on. It's a lot going on, like we just talked about, going in the market. We'll see what's up with it. But in the meantime, I say if it clears 81.24, yeah, 81.20. I'm gonna say if it clears 81.36, over 81.36, look for a move to 81.72 and 82.17, and then possibly higher. Now, if we lose 80.61, look for a retest of 80.28 and possibly 80.12 and then possibly lower, but it may get caught up. It may bounce off that 200-day like it did before. So we'll be just keeping that on watch. But just wanted to make sure I pointed this out because, it's important to pay attention to other things, not just the typical stocks. Now we're going to talk Tesla. They're the robo taxi for is going live. Well, they're testing out a launch in Austin, Texas. It's an invite only, so everybody won't be able to do it. But Tesla finished up this week. So like everybody looking at this, look at how tight the compression is right here, how tight it's been consolidating right in this little range right here. So Tesla is gearing up for some sort of big move. And we got to make sure that we keep our heads on the swivel so we don't miss this move with Tesla. And I don't know which way it's going to go, but I'm kind of bullish on it at this point, but we'll see. We got to see. It's a lot going on. It's not all market related. It's Elon is in a whole lot of stuff. So a lot of things to keep an eye on with the stock. So, but for now, for Tesla, we're gonna keep an eye on it, but over 332.36, look for a move to first target would be 335.20, second target 345.78, and then possibly 353.89. If we were to lose that 317.78, I'm looking for a retest of 309.93. Right there, we got 308.30, 303.64, 297.78. And then we got another level down there, 286.56 if we were to get down there, right? So, but keep Tesla on watch. I think Tesla's going to make a big move now. As far as this event goes, again, like I said, it's just a test launch. And we'll see how it goes. See how it goes. If the experience is positive, and we don't know. We don't know. I just feel like Tesla has been waiting. It's been waiting for something to happen, and Tesla makes big moves after this type of consolidation. So keep it on watch. All right, JBL, new all-time highs. It's been running like a bat out of hell since earnings. It's on a tear. It's on a tear, on a tear. So what do we do with something like this? It's just been running. Like even on Friday, you see how the market, what's going on in the market, and this is how it ended. It still continued to move higher. So yeah, so what are your thoughts on JBL? JBL led the tech sector it was one of the biggest gainers on the tech sector for the week. And so it's definitely worth keeping on watch. It's still we got a nice 222 continuation here on the daily. And like I said, we're in price discovery now because it's at all-time highs. I really don't like trading stocks at all-time highs, but we're just gonna keep this one on watch. It's over 208.69. Look for a move to 210 and then possibly even higher to 215, 220. Now, if we were to lose that 208, I'm sorry, at 203.34, then we likely come down and fill this gap here at 196.58, somewhere around there. So just keep it on watch because this would be a nice area. Because think about it like this: you see how it's been riding the 9 EMA up this whole time. Then we got that breakout right here. So a nice retest of the 9 EMA would be nice. We'll see where it ends up, but coming back down here would be a cool area for a to buy. I don't chase all-time highs. So, even if it took out that level, I personally, depending on what the strength is, and obviously you got to find a setup because I always tell y'all just because the trigger for calls get taken out, that doesn't mean that there's a setup to trade. No setup, no trade, regardless. So yeah, but I like retest better than chasing those highs like that. So yeah, keep it on watch. Keep it on watch. Dell. Dell. Look at Dell. This is a nice chart. I like it a lot. I like it a lot. Look at Dell. So it's waking up. It was in this consolidation for a while, broke out of the consolidation. Now we got to move because Dell is recovering from a big drawdown in the stock's price. There's a lot of ground to make up here on Dell. And I like what I'm seeing so far. I like what I'm seeing so far from the stock, and it looks really good. It looks good. So I think I say keep this one on watch also, because if we were to clear this 119.75, look for a move to 120.80, then 122.26, then 125.37. If we were to lose 117.62, look for a retest. Well, the best thing for this to do, because even if it was to do that, come back down here and retest this breakout area. That would be cool, but it could come back down and retest the 90 in May too. So what I'll say is there's a gap there. But so if we lose that 117.62, look for a retest of that 116.30, 114.87, and 112.92. But like I said, be careful because it's a big possibility that you just come down, retest the breakout area, and then take off. But keep Dell on watch. This looks great. I like a nice little bull flag. And we got that breakout right there. This thing is on the move. Keep Dell on watch. This looks really great. Look at the weekly too. That breakout here is really strong and force. A nice 222 reversal right there in force. Well, I mean, that's more so, yeah, it's a reversal. So is it well, I guess we can call it a 222 continuation, but uh yeah, but either way, this breakout was beautiful and it looked like that's a lot of strength right there on the week and the daily. So keep it on watch. We talked a lot about it. Just make sure y'all keep it on watch. So Coin looks great. The reason Coin is running like a bat out of hell is because Coin they received a license to provide services in all 27 European Union member states. So that's bullish for the stock. And we got some levels, some room. Now, one thing about Coin, when Coin is in play, Coin is in play. But I wouldn't be surprised if Coin gap up over this level if that's the case. But Coin has a very tricky way of moving, because it tracks Bitcoin also. And sure, I know, I know. The, the airline letting me know that my flight is near. Like, I know. So anyhow, let's just talk about this quickly. So yeah, Coin, man, over 310.75. I'm looking for a move to 325.76 and possibly up there to 339.91, but Coin like to pull back first sometimes. So, but Bitcoin is up, like I told y'all right now, and it's a lot going on. So I'm not sure if what will happen right now with Coin, but that was some pretty good news for a continuation on the stock. Now, if we were to lose that 298.10, we possibly fill this gap. I mean, it's just a small gap though, but down there to 295.27, and then we could possibly retest the breakout area down here, or it could come down and retest the nine. We'll see what happens. We'll just have to see what happens because it may not do any of that. There, it blasted through so many levels on this candle here when the news came out. So yeah, so we lose that 295.27, then we got 283.93, and 275.30. So it's a lot of levels there to keep an eye on for coin. Oracle. Nice 222 reversal to the downside with a bearish engulfing here after running up like that. So now we got this. I like stocks like this. I like when we get these types of moves on certain stocks because then those retests be beautiful. Those retests be something for the books. It's marking up certain areas really quickly where we could pause. This is already on heading this way down. Now there's this is uncharted territory. It's at all-time highs. So we'll see if we lose that 204.64. Look for a retest of now they made. I'm gonna tell you, I got 199.76. I'm just trying to move with this where this gap fill is, this area. But 200 is a psychological level. So it could hold 200. So we'll just see what it does around this area right here. If it lose there, then we got the 9 EMA right there. And again, stocks can get wiki. So just because it holds the 9 EMA on the daily, that doesn't mean it doesn't reach that 195.13 and bounce or something like that. But we got to see what happens because the stock up at all-time highs and there's some uncertainty. The stock could come down more, but it's been riding this 9 EMA up. So it could get, stopped there. So, but yeah, just keep it on watch. And to the upside, if we were to clear that 213.80, look for a retest of that 216.60 and then 220 because it's at all-time highs already. But yeah, keep those stocks on watch. All right, I gotta hit this stock. I have to hit this stock. So I have to go. I have to go. Goldman Sachs. So, last week I told y'all last Sunday that this is how it closed on Friday. And I said, although we lost the 9 EMA, keep it on watch because, we still were holding levels. And, the stock gapped up on Monday and it took out the first target. And, I don't have this chart marked up. So that's just how it is. I'm just marking it up on this one. I like having a clean chart. I told y'all I like to have a clean version of my charts, man, because I work in chaos a lot. But yeah, but here's Goldman Sachs, man. If we were to clear that 620, that 640, 642.64, look for a move to 646.35, 650. And I'm like, if we break back through there, I think we are going to head back up to that 672.19. But it's levels in between there, but that 660 is still there. But I'm just saying that's where it would be headed. That would be my target if it breaks through that 660 or over 650. I'm just going to say it's going back to 672.19. Now, if we were to lose that 636.69, I'm looking for a move back down to 625.55, 620.97. Keep Goldman Sachs on watch. I keep saying one more stock. Intel. Look, I got a lot of stocks that came out that was requested. Here's Intel. I want to show y'all this chart. Look where it finished. Look how Intel finished here. Now I got some special trade ideas that I'm not going to cover during this meeting, but I will post information in the Discord about it. So, but I'm not going to cover it in this meeting. But yeah, look at this Intel chart. Look at it. It's sitting right here. A lot of volume went into Intel. A lot of volume went into Intel. So we just want to keep this one on watch because there's, when you get these, I like when prices coil and it's just been in a channel or this wedge right here. Let's just see what happens. It's holding the 9, it's holding the 50, but it's just under the 200 and it's just sitting here. So I don't really want to mark this chart up either, but I'm gonna put something on here. All right. So if we were to clear that 2189, clear that 2189, I'm looking for a move to 2246, then 2292. And this thing can move. It could really go if it gets reclaims that 200 EMA. Now, if we were to lose the 2088 price level, I'm looking for a retest of 2054, then 2025. So, but yeah, keep this on watch, keep it on watch. I really want the breakout to happen, let the breakout happen, but it got my attention. A lot of flow, a lot of volume was going into it. Volume was going into it. So just keep it on watch. And yeah, just special shout out to like Google, special shout out to Microsoft and the rest of the Mag 7, like Nvidia, all of them. But yeah, fam, that's it for right now. And if you have any questions, just drop them and I will talk to you guys later. I have a flight to catch. Cheers. Who records a meeting on their